Good morning, everyone. We're going to get started here. Just as a reminder, I'm going to read a little disclaimer. KW is not intending to be the expert on the topic. We have brought some experts to you, and it's intended to provide you insights to begin exploring all of your options and to help you ask better questions. We always want you to be able to protect your businesses and act aggressively and prudently to protect them and to stabilize them. And what we're doing today is not necessarily a reflection that MAPS or KWRI or any employee or representative from MAPS or KWRI is the expert on this. This is not, please don't go back and say MAPS said XYZ. That is not the case. But we do have an expert on the call with us. Many of you guys were on some time ago when we did the initial stimulus call with Chris Bird, who was a senior IRS agent for many years. Chris, I let you give a little bit more of your background, but he is certainly an expert. He's done this same call that you're about to have for the state of Florida, and you say New York, Chris?
And Kansas, yes.
Kansas, awesome.
And Florida and Kansas, yes.
So we believe that he is very knowledgeable on this subject. He is also our Market Center investor and has some ties into KW himself. So he is going to spend as long as we can today on this. I know many of you guys will need to drop off probably before he's done. We are recording it. I will provide the recording for you. So if you miss something and you have to drop off early, then we'll get you the recording and you can listen back to whatever you missed. So Chris, with that, I'm just going to let you take it away and you tell us what we need to know from here.
Thanks, Amanda. And everybody, number one, today from Amanda, you're going to receive 3 files from me, a Word file, a PowerPoint file, and an Excel file. And it's all background for this information. And I did this yesterday for a group of accountants, and we were on the phone for 2 hours. And I'm cutting this for real estate into about 40 minutes, and then maybe leaving as much as 15 or 20 minutes of time open for questions, things like this. But what I want to focus on today is simply one thing. Before I do that, let me just tell you this. Get the word expert out of my title. I'm not an expert on anything, everyone. This stuff changes so fast that all we're doing is kind of keeping our head above water. And I know a lot about this. I don't know the answer to every question, but I know the answer to most questions. So the point is, this webinar is about how we prove forgiveness, how we prove that we spent the money on the right things with the bank. So here we go. I'm going to take you through this, and then I'm going to skip some of my PowerPoints, so don't be questioning, what about this, what about that? It's simply because of time. We don't have time to cover everything in this webinar that we would in another one. So basically, look at the second bullet on this page. The path to forgiveness is full of potholes, all right? So this is not the easiest thing to figure, so here we go. The law was written so hastily and passed that many questions were unanswered. So I started with the law, everybody, not the articles about it, but I started with the law. And then the American Institute of CPAs has made some suggestions to both the SBA and the IRS, but probably will never get covered because there's so little time left in the 8-week period of time. And the SBA has issued 4 different sets of guidelines since 4/2/20. And the latest guidance issued on May 13th, everyone, regarding a safe harbor, which I'm going to take you through. So you're all going to get a Word file, an Excel file, and a PowerPoint file. And I spent over 30 hours creating this Excel file. It really is good. It's an indicator only. There may be some insignificant errors, and you cannot call me, Amanda, because somebody can't understand the Excel spreadsheet. I give it to you free, all right? You got to play with it and see what you think, but it really does work well to compute how much is forgiven of the PPP loan. And one thing very quickly, I assume that most of you, and I hope everybody, of the 19 people on board so far, after listening to this the first time around, if you didn't get your PPP loan, I wonder why, all right? And then there's still maybe money left, and you may want to think about it doing it as soon as you can. Now, first of all, a couple comments. In the time since I've talked to you last time, the IRS issued notice 2020-32. And we were waiting for this because here's what they're basically saying. Hey, we're going to give you money. SBA is going to give you money, all right, to pay your bills. Then we're going to forgive that loan, all right, if you did it on the right things. And then can you deduct what you spent the money on? And everybody from an accountant's perspective, no, you can't, because the money was forgiven that you paid your bills with. Well, then the AICPA came out, and Chuck Grassley in Congress said, wait a minute, IRS, you had no right to issue this procedure, this notice. It is contrary to Congress's intent. So as I speak here today, I'm telling you, you can't deduct what was forgiven of the PPP loan, but I project that by the end of the year, Amanda, the Congress will override the IRS and say, you can still deduct what you spent, even though it was forgiven and you did not have to pay it back, because that was the intent of Congress. We'll find out. Now, everybody, what I'm going to talk about now is huge. And Amanda, this really is your situation too. So everybody, since we talked last time, right, a lot of media exposure, a lot of public backlash on the fact that large companies got this money, everyone from the PPP, like Ruth Chris's Steakhouse, Los Angeles Lakers, etc. And the media and the public backlash is, why was this not given to small business when large companies like this got the money? So those companies and a lot of others actually turned the money back in, right, to the SBA and to the lender. So then on April 23rd, since I've talked to you last, all right, SBA issued question 31 that questioned, do businesses owned by large companies with adequate sources of liquidity to support the business's ongoing operation qualify for the PPP loan? And to paraphrase a comment I heard earlier today, everyone, is, hey, my income's not going down. I don't need this PPP loan, right? And I'm going to tell you right now, that doesn't mean your income's not going to go down in the future over this pandemic, everyone. Maybe you're doing okay right now, but you don't know how you're going to be doing 6 months from now. So the answer from the SBA, bottom of the page, all borrowers should review carefully, right, the required certification that current economic uncertainty makes the loan request necessary to support the ongoing operations of you, the applicant. So in the last 3 weeks since I've talked to you last, I mean, all kinds of financial advisors, all kinds of accountants have said, hey, you need to pay this money back by May 14th, everybody, which happened to be, yesterday, so that they can't come after you criminally for asking for this money when you really didn't need it. And everybody, that left a lot of people in a quandary. Now watch this. So now, just literally 2 days ago, on May 13th, SBA question and answer number 46, everybody, question and answer number 46 says this, all right? Updated Paycheck Protection Program frequently asked question number 46, published May 13th. How will the SBA review the borrower's required good faith certification concerning the necessity of their loan request? And here's what they've said. Please look at the bold type here. SBA, in consultation with the Department of the Treasury, has determined the following safe harbor. A safe harbor will apply to the SBA's review of PPP loans with respect to this issue. Any borrower that, together with its affiliates, receive PPP loans with an original principal amount of less than $2 million. Everybody, this is a wonderful document, a question and answer by the SBA, meaning that every one of you that asks for, and I laugh when I say this, less than $2 million, are automatically deemed to have needed the money. Therefore, you don't have to give it back, everyone. Therefore, they won't be coming after you. This will answer the question, well, maybe I don't need it now, but will I need it down the road? And I will tell you, I've been working on this for 6 weeks. I have not been involved personally with one taxpayer or one client who has gotten $2 million or more. So everybody, this is really, really good news. All right. So anyway, there you go. Now, here's why Amanda and I are on this call. Everybody, listen up if you would. And you're going to see me jump around to get right to the heart of the PowerPoints that apply to you in our time constraint. The next and big question is how to make the majority, if not all, of the PPP loan forgivable. All right. And let me just give you an example. And none of you are going to like to hear what I have to say, but this is a tongue-in-cheek comment. everyone, spending money by one of your clients on coaching isn't spending the money on a forgivable expense. And Amanda, I want you to smile when I say that, all right? Because you got to spend the money on the right things, everybody. And coaching and marketing and advertising is not considered a forgivable expense. So I want to let you all know that, and that's tongue-in-cheek comment, but it's just, you know, neither are accounting fees, okay, paid to me. Neither are tax representation fees paid to me the right expense. So I've got to teach you all very quickly what are the right expenses, how to make the majority, if not all, of the PPP loan forgivable. And then here we go. Basically, by June 30th or longer, everyone, because of the 8-week period, you've got to apply to the lender, the person, the lender, the bank that gave you the money. You've got to apply to the lender to show them how you spent the money. And to all my coaches on this call, you've got to teach your agents that they're going to have to apply to the lender on a form that we have not seen yet. Now, we know what's going to be on the form, but we don't see the form yet from the SBA. It'll be coming out anytime, all right? And then the last sentence of the second bullet, only the amount spent on the right costs qualify for PPP loan forgiveness. Now, notice, everybody, the 8 weeks at the bottom. So let me make this statement very clearly. You have 8 weeks, and pardon me, I've got to shut my door, everybody, just for a second.
Guys, because I didn't make you log in here, would you please, if you want a copy of this recording, the spreadsheet, the PowerPoint, everything that Chris is talking about, would you please email Amanda Light, L-I-G-H-T, at kw.com, Amanda Light at kw.com. I put that in the chat also.
And by the way, if anybody saw me when I got up, everybody, I'm going into business. Amanda and I are starting a business where we're going to, you know, back in the day, everyone, you bought 2 pant suits, okay? So you got 2 pair of slacks with 1 jacket, all right? Well, we're going to go the reverse. Amanda and I have started a business where we're going to start a suit company that makes 2 jackets with no suit, with no pants, all right? Because the new league, you know, you saw me in shorts, everybody, in sandals, and a nice Tommy Bahama dress shirt. So anyway, there's the humor. And here we go. Lender requirement of forgiveness. Everybody stay with me. This is what you're here for. The next 3 slides show you what the lenders will be looking for from your clients and yourselves and me to calculate the amount of the PPP loan that will be forgiven. We now know that the borrower, you and your clients, must apply to the lender for forgiveness, meaning an SBA application is in the works, but as of the day and time of this webinar, we do not have a copy to share with you. However, the law, the CARES Act Section 1106 ECHO, covers this in detail, and here we go, everybody. Here are the issues. So here's the law. An eligible recipient of a loan seeking forgiveness shall submit to the lender that is servicing the covered loan an application, all right, written application, which shall include 4 things. So first of all, everybody, all of you that have employees, okay, now listen carefully. I'm a one-owner S corporation. I'll let you, Amanda, I'll let you money, Amanda is too, but I'm a one-owner S corporation, all right? Why am I an S corporation? That's the subject of another webinar, all right? But I'm the only employee of my S corporation. So look at number 1. Documentation verifying the number of full-time equivalent employees on the payroll and their salary level for 2 different periods, everybody, okay? And the first period is the 8-week period starting with the day you get the money deposited into your account. That's called the covered period. So your bank is going to want to see your salary for that 8 weeks starting with the day that the loan is deposited into your account. Then they're going to look at a test period in 2019, right? And I'm not going to have time to go over that test period with you, but it is in my material specifically, everybody, later in my slides, and you're going to get a copy of all my slides, all right? So here's the deal. For all of you that are sole proprietors, and many of your coaching clients will be sole proprietors with no employees, right? They will have nothing to do with number 1. But if a sole proprietor, everybody, a realtor, a client of yours, has an employee, an admin employee who they give a W-2 to, then they're going to be involved in number one. So guess what? The bank is going to want to see payroll tax filings, item A, filed with the IRS, and any state income tax payroll filings with the state that you're in. So that's number one. Now, again, only if you have W-2 employees or if you yourself are a W-2 employee of your own business, like Amanda and Chris are. Now, number two, everybody, number two, very specifically, documentation, more the better, not less, including canceled checks, payment receipts, credit card charges, invoices, receipts, transcripts of accounts if necessary, bank accounts, or other documents verifying payments. And here we go, everybody, besides payroll, on covered mortgage obligation. I'm going to define that in a few minutes. Covered mortgage obligations, the interest on covered mortgage obligations is a forgivable expense. Payments on covered lease obligations, so lease payments made in the 8 weeks on covered expenses, everybody, a car lease, your rent to your office paid to the broker, your rent paid if you have an outside building that you're paying rent on, if you have realtors, a storage building where you store your signs and your staging equipment, that would be a lease, right? And finally, covered utility payments. And I'm going to define specifically what they mean by covered utility. So right off the bat, everybody, the 4 big areas where you have to spend the money are payroll, which I'm going to define and give you multiple examples, the interest on covered mortgage obligations, the payments on covered lease obligations, and the payments on covered utility payments. And that's the big one. Now, number 3, then you've got to sign a certification, everybody, from you. So we certified ourselves when we applied for the PPP loan. We'll have to sign a document that this is presented true and correct. Look at my item 3A. B, the amount for which forgiveness request was used to retain employees, which I'm going to define. Make interest payments on a covered mortgage obligation, make payments on a covered rent obligation, or make covered utility payments, right? So there's number 2 and 3. And finally, number 4, always worrisome. Any other documentation the administrator determines necessary. So SBA comes out with more lists, everybody, we've got more things to do. And look at item F. The banks are prohibited from forgiving without you providing the documentation. So you can't call your bank and say, hey, spend all the money on the right things. And the bank says, oh, thanks, good, all right? They're going to make sure you prove this, so documentation. And finally, item G. After, not later than 60 days after you submit all this information, the bank, everybody, the bank is the one that's going to determine the forgiveness, okay? Not the SBA, not the IRS, but the bank, all right? So make the bank your friend, not your enemy. Now, what I want to do is, again, skipping to the key, because what I'm skipping over, everybody, is what I've covered before. And in the time constraints we've got, I want to make sure you see the new stuff. So there are many, many unanswered questions with researched opinions, right? Do we know the items the lender will want to see with the application for forgiveness? Absolutely, yes. Do we have a form to fill out at this time to apply for loan forgiveness? Not yet. Will lenders vary in their request for documentation? For sure, just like they varied in their request for documentation on the PPP application. Should you try to work with lenders instead of being a pain to the lenders? Absolutely. Are lenders worried about this phase of the PPP process? Everybody, they're very worried about looking like the bad guy, right? And what method of accounting? Everybody, go with me on this. Listen to me very carefully. It's the checks you write during the 8-week period and the credit card charges that you do in the 8-week period that counts, and nothing else, right? So everyone, you cannot basically say, well, I incurred this lease expense I did not have the money to pay for it, so I didn't pay for it. That don't count, right? It's what you paid for. And literally, everybody, just go with me on this. Let's say that your PPP loan was deposited on May 15th, okay, today. And you've got a bill in front of you for a lease payment, right? And you make the lease payment on basically May 16th. I'm telling you that's covered, everybody, because you wrote the check in the 8-week period of time. Now, for those of you that have payroll, listen very carefully when I say this, because this is catching a lot of people off guard, all right? This is driving accountants nuts. Let's say that I got my PPP deposit on April 16th, okay? Go with me. And I'm an S corporation. Now, my payday is always on the 20th of the month, all right? So everybody, my payday on the 20th would be for the previous 2 weeks or the previous month, whatever, right? But because my payday is on or after the date that money was deposited, I count that entire pay check because it was paid in the 8 weeks, even though that was earned, some of it, prior to the date of the paycheck. So I just want to make that aware of that, everybody, because this is going to get you on both ends, right? It's going to help you on the front end and maybe hurt you on the back end. But basically, that's the way it works. The bank is going to look for checks written and credit card charges in the 8-week period, and that's simply it. Now, I want to take you to listen up carefully, because here's the law, and we're getting right to the nitty-gritty, everybody. So I'm jumping into this very quick. So the law says the covered loan, everybody, is the PPP loan. Now, what is a covered mortgage obligation? Now, here it is. A, it's a liability of the borrower. B, is a mortgage on real or personal property. What does that mean, everybody? If you're buying a car, if you're buying equipment, if you're buying real estate that your office is held in, then that is a covered mortgage obligation. If the interest is otherwise deductible on your tax return, the interest that you pay in the 8-week period, starting with the day it's deposited into your account, is a covered mortgage obligation. So you got to owe it. It's got to be a mortgage on real or personal property, and a car payment counts as that. And you must have incurred the mortgage prior to February 15th of 2020. So if you bought a car, everybody, in March, okay, I'm sorry, it doesn't count. Now, so covered mortgage obligation, the interest on a covered mortgage obligation. Next, the term covered period means the 8-week period beginning on the date of the origination of a covered loan, and that's regarded as the date the bank deposits the money. Covered rent obligation, lease, everybody. What could this be on? This could be on your office rent. So what I've been telling brokers in our town of Champaign-Urbana, get rid of the desk fee and break out in the desk fee what is rent. So the bank's not going to know what a desk fee is, everybody. So break out the rent as a separate expense. This could be a car lease, everybody. This could be office lease. This could be a building you're leasing for your real estate building, all right? So a covered rent obligation means rent obligated under a leasing arrangement in force, again, before February 15th of 2020. Now look at number 5, everybody. Here's the fourth expense. The term covered utility payment means only what you see listed there. Take nothing more to this. Ask no questions, everybody. It's nothing less and nothing more than the list. Electricity, gas, water, transportation, like fuel for your vehicle, telephone, cell phone, hard lines, or internet access, right? This is the list, everybody. And people are saying, what about trash? It's not listed. I mean, obviously some of you think it's utility, but it's not listed. What about a security system, everybody? Some of you think it's a utility. It's not listed. Electricity, gas, water, transportation, fuel for your vehicle, for example, cell phone, everybody, hard lines, or internet access. And clearly, every one of your clients is going to have cell phone and internet access in number 5, right? They may or may not have anything in number 4 except they're paying rent, right? And they will all have some payroll, but maybe not under number 1. I'm going to hit that next, all right? So finally, number 6, everybody, the eligible recipient means the recipient of a covered loan. Now here we go with, I'm taking you now, everyone, to my Excel spreadsheet. And I'm not sure you have seen this before, but if you haven't, this thing will knock your socks off, all right? So you can't call me on this. I've got countless hours on this. I paid a software engineer to help me with this. But I'm going to demo 3 situations in the next 10 or 12 minutes before I cut this open to questions, all right? So everybody, first of all, in brown is where you enter things. And there are 4 steps to this. There are 4 steps. And what I've got to do, I've got to move this box around a little bit, everybody, to have my access. Okay, so we've got the Small Business Paycheck Protection Program. And step 1, everyone, is simply calculate the PPP funds that were received. Step 2 is calculate gross payroll budget for S corporations, Amanda, you and I, C corporations, and any of your clients that have W-2 employees. Step 3, everyone, is the self-employment for your clients who are not an S corporation, who are not a C corporation, that are simply self-employed. They may be an LLC taxed as an S corporation. And the bottom of it comes up to everybody, the bottom of it, step 4, determine loan forgiveness. Now look at line 91. PPP loan received will feed down here, right? Line 93, total qualified forgivable expenses, right? And then line 97, final qualified forgivable expenses. Line 99, non-forgivable loan amount before the idle advance or the grant. And line 100, you enter the amount of the idle that you got, right? And I hope most of you did. And finally, everybody, line 102, the total non-forgivable PPP loan amount. And I want to make a statement before I start feeding you numbers. This amount becomes a loan amortized over 2 years at 1% first payment deferred for 6 months. So we're going to start off easy, everybody. I'm going to the top, and Amanda's going to be our victim. Watch, line 3, Amanda. And I'm going to tell you that she got her money, everybody. Now watch this. She got her money on May 1st of 2020. Okay. Now, the minute you start entering a group, the things start filling in. So watch. You hit tab. She got her money on 5/1 of 2020. Now watch. I'm going to take you down to line 31, right? And by putting in the date above, this automatically defines what your 8-week period is in columns C and D. So the 8-week period starts on May 1st of 20 and ends on 6/25/20, and broken down into 2 4-week periods of the 8 weeks, 5/1 to 5/28, 5/29 to 6/25. That is for your S corporation and C corporation, or if you have W-2 clients. And the same goes for line 50, 51, and 52 if you are a sole proprietor. Now here's the first thing we got to do. To set up my worksheet, everybody, you got to tell my worksheet how much you got in PPP loan. So Amanda, feed me if you would. Amanda, jump in. We're going to do a sole proprietor client of yours. So Amanda, do you have clients that are still sole proprietors? Shame on them, but do you?
I personally do not, because I coach only market centers, but let's just say I did. And let's say they got 75.
How much?
Yeah, go ahead.
And they got how much?
75.
75. Their net profit was 75 grand. So everybody, I'm going to do this very quickly and then move to the bigger area. Now watch, everyone.
Oh wait, is that PPP
So
or is that their? Okay, just I don't know what number.
That was their profit.
Okay.
That was their profit.
That
was their profit. Okay, that was their profit. Now, that may dictate to 130 or 125,000 of GCI, but a $75,000 profit. Now, man, should I avoid this because you don't have these clients, or none of our listeners have these clients? Should I get away from
Well,
this or stay?
I think this is okay, guys, right? Because you guys are going to be coaching agents on this just as well as your market centers. Is that okay to go with agent example?
Absolutely.
I'll do this very quickly.
I'm sorry. So we have majority of the agents are probably 1099 who don't have LLCs or S corps or anything, and they basically just 1099 independent contractors or agents.
And here we are, man. That's what we're doing.
Yeah,
Okay,
that's
what
the
we're doing.
example we're
Okay.
using.
So Whale, if I pronounce your first name right, Whale, is that correct?
Well, yeah.
You tell me a number. Whale, give me a number. How much profit, Whale?
My one of the agents 1099 was 130,000.
That's gross, though. What would their profit be? Just give me a number.
10,000.
No, they better be more than that. Okay.
No,
We'll go with 75 grand profit. Okay.
I'll give you a live example of what they got. They got 20,832 in PPP. That was their number.
Oh, very good. So let me tell you what it means. All right. That means, everyone, their profit was in excess of 100. Everybody, listen to what Whale just said. You cannot count more than 100,000 of profit for any one person or 100,000 of salary. So everybody, if Amanda's taking out 800,000 of salary from her S corporation, which I know she is, let me say that again. If Amanda's taking out 800,000 of salary, she can only count 100,000. So Will, just real quickly. So I'm going to watch what happens. I know this because I've done this 1,000 times. For your client, Will, you can only use 100,000. And look at the loan, everybody, $20,833. So many people I've talked to got a loan of $20,833 because 100,000 divided by 12 is 8333 times 2.5 is 20,833. Everybody, what I'm going to do for you now is priceless, Will, so stay with me, all right? Now, everybody, you have to enter in line 24 the amount they actually got. So in line 22, my Excel spreadsheet calculates how much they actually got, but you must confirm in line 24 how much they got. And let me tell you why. Banks were notorious, Amanda, for giving more or less than they should have, all right? So you've got to start off with the right number in line 24. Now, Will, here we go. Now, we have no payroll, so we're to have no step 2. We go right down to step 3 for Whale's client. Everybody, now watch. This is huge. Now, you've not seen this before, and here's why so many self-employed people, Amanda, never applied for a PPP, because they had no payroll, and therefore their accountant said they didn't qualify, and they were just stupid ass wrong. Pardon my language, but they were stupid ass wrong, right? Because they did qualify. Watch. So line 54. Will, this is the money we need to spend to equal 100% of forgiveness. We need to spend $28.33, okay, to get 100% on the right things. 55. However, for Schedule C and Schedule F, we are limited to an owner's compensation formula. This is what you've not seen before. This is why this is priceless. Now look at the right-hand column and look at this column, everybody. Do you see the 100,000 bucks? Okay, right here. And the formula is divide by 52 times 8 weeks. This is in the law. And that equals, everybody, 15,385. And divided into the owner. Now look at line 56, everybody, column C and D. Look at column C and D of line 56. The owner is given credit automatically without doing anything for $76.92 times 2 for payroll, even though they don't have any W-2s. So that automatically, Amanda and Will, is forgiven the $15,385 of the $28.33. Everybody, freaking phenomenal. Are you with me?
So if your agent didn't apply, there's still money, we think. And it's still worth a conversation, especially if you're a team leader on this call, for your top 20%, for your ALC. Let's make sure they applied, even if they don't have assistance and that sort of thing that they're paying because of what he just said. You guys catch that? You have a lot of agents that didn't apply.
Let me follow up, all right? Now, Will, what you got to tell your people to do, in my opinion, is they need to cut themselves a check twice during the 8-week period for $76.92. And in the remarks section, they're going to write owner compensation replacement PPP. So the bank can see this, all right, as to what they've done. Now that's automatically forgivable. Now, Wheel, I want to bring you into this, buddy. So look up if you would. Everybody,
Sure.
Look what I do with Wheel giving me the input. Now, Wheel, in addition to that, I would like you to tell me about any interest on business mortgages for a car loan or a building that they own or equipment that they're buying, if any. And
None.
you don't have to create a number if it's not there.
None.
None? Okay, everybody. So none, and you can either put 0, everybody, in tab, or put 0 in, okay. Now, Wheel, rents. Office rent, office lease, car lease, whatever. How much?
Office rent is $300 a month.
$300 a month. All right. And utilities, water, gas, electric, cell phone, internet. How much a month?
About 700.
A month. Okay, very good. Everybody, let me show you what's just happened. All right. What's just happened is on line 54, Amanda and Wheel, $20,833 was the amount they got. On line 60, they have spent $17,385 on Wheel the right things, leaving $34.49 that the bank is going to want to say is not forgivable. All right. And therefore, there's nothing they can do about it. Now watch. And you go down to the bottom of my worksheet, everybody, and notice on line 102, $3,448 is non-forgivable, and don't bother about the $1 difference, okay? Now, I will say one thing. Amanda and Wheel, when Dale and I taught you the first time this, we told everybody to get their idle money, which was about $1,000. Remember that?
Yep.
So I'm going to tell you they got $1,000 of the idle, because most people have got it by now. And what that does, everybody, is when you get the idle grant, whatever you got, that will make that much of the PPP non-forgivable. So it is our position that you're going to owe $44.48 back to the SBA at the end of the day, all right? And you will pay that over 2 years at 1% with the first payment deferred for 6 months. And that's how it works. All right? Okay. Now, Amanda, I want to do with you on this.
Thank you,
What I'm going to
Chris.
do now. Oh, is that good? Any questions? Any comments on this? I mean,
just real quick, that does not, entering that amount in there still have to be documented in terms of the rent and the bills and all that stuff. Whatever the bank.
Absolutely. They're going to have to show
Yep.
lease agreements. They're going to have to show utility bills. I mean, this is just the worksheet, and now you got to have all the proof for it.
Perfect.
What you don't have to have the proof for is the $76.92 and the $76.92, and I want those 2 checks written. That's going to be the proof for that. All right. Now, what I'm going to do now.
They can use their home
Oh,
office.
yeah.
Okay.
Yes.
But only the home office portion, right? So not their whole mortgage.
That is correct.
Yeah.
That's correct. None of these expenses, like the mortgage interest, the rent, utilities, can be included as a forgivable expense unless they're first deductible. That is correct. Now I'm going to do one more, everybody, to get to the S corporation. Let's go to the, Amanda, I want you in on this one.
Well, and, maybe Chris, okay. Could you come off mute? Because Chris had some questions in the chat. So maybe we could use an example of his.
Okay, very good.
Sure. I file S Corp and I paid myself and my employees W-2 salaries. And my other question was, we have a transaction coordinator that's a third-party contractor that we 1099. Would that count as payroll?
No. Okay.
Okay.
First of all, Chris, let me specifically tell you about that coordinator that you 1099. The reason you can't count theirs is because they can go after their own PPP loan, Chris, based on their profit from that 1099. Otherwise, it'd be doubling up. So Chris, here we go. We're going to do you, if you don't mind, Chris.
That's fine.
And you're going to give me the numbers. What was the date of your PPP loan?
I received that on, I believe it was April 27th.
And that's got to be a specific date, everybody. I mean, you got to look up the bank deposit. So 04/27/2020, and that starts everything. Now, Chris, are you the sole owner of your S?
Yes, I am.
Okay, so Chris, give me a number. What is your salary that you took out of your S corporation in 19? What would your W-2 have said?
60,000.
Gotcha. All right. And what are the collective W-2 salaries that you pay to your employees in 2019 on W-2s?
23,452.
How's that for an A? Total.
Correct. Total.
Shoot. 23,452. 23,452. All right.
Yep.
And everybody, my Excel spreadsheet, and I want you to validate this, Chris. You should have received a PPP loan of exactly $17,386.
I got considerably more than that. I got 21,300 or 21,900.
Okay.
Excuse me.
21,900. Now, everybody, this is a great real life example because for whatever reason, and you're telling me everything, those are the W-2s right down the line. So I would lay you money, Chris, that the bank looked at that commission you were paying your transaction coordinator and regarded that as salary. Am I correct?
Yeah. Correct. And
they did it wrong. They did it wrong. So right off the bat, let me tell you what this says, everybody. All right. He should have only gotten 17,386. He got 21,900. So right off the bat, I'm going to tell you at a minimum, you're going to owe about $4,500 back just because of the disparity between line 22 and 23. That's the way it's going to work. Now, Chris, here we go. And now listen, you all listen up, everybody. Let me show you some tricks. So first of all, and Amanda, this is really good doing this, okay? And then we'll take questions. But first of all, here is your 8-week period and all that good stuff, right? Mm-hmm. Now, we're in step 2 because we're not sole proprietors and all of W-2s, okay? Line 35, this is the total amount of PPP money that Chris needs to spend to get forgiveness of the full 17,386. And there's a rule, and I'm going to show you how to work around this rule. You must spend, Chris, 75% of the 17,386, that's line 36, on payroll. I'm going to show you how to play with that. And 75% is 13,039, and that comes to 75%. Mm-hmm. So please look, everybody, at line 37. Planning point. Do not decrease payroll. Chris, for the 8-week period of time, you continue paying them what you paid them in 19.
And so I have a
number.
Let me do a quick question about that. Yep.
Let me do this first. I'll take the question. So I recommend that you continue paying yourself and the employees the same $69.50. Sorry, I can't do that. Sorry, I got. Okay, so you put it down here, $69.54. Put it in the wrong line. $69.54, and then you will be over the 75%, and you will be fine. Now, Chris, let me do the line 39, 40, and 41, then let me come back to your question, okay?
Sure.
So everybody, you keep the same amount of payroll going so you don't have to pay as much back. Now, Chris, mortgage interest in each of the 4-week period. Deductible mortgage interest, anything?
No, I don't have any there.
No, okay. Rents.
$350 a month for office rent.
All right. Utilities.
We have another $400 between all utilities.
Okay. Okay.
So that's phone, internet, and standard utilities for the office. So.
Very good. Okay. Now, everybody, look at this if you would. Now, first of all, let me say this first, just so you know. Everyone, there's no way we're going to be able to help the fact that Chris got too much money, okay? So I'm telling you right off the bat, the 21.9 in line 24 versus the 17.386, that's going to come back to bite no matter what we do. However, I would like to show you a little trick about the 17.386 in line 35. If we leave it the way it is, and Chris, here's where I think your question is anyway. If we leave it the way it is and continue paying payroll, we're going to owe another $19.78 back when it's all said and done, all right? So here's my point. Chris, you cannot give yourself a bonus,
Right.
all right? The banks are not going to look well upon that. But here's my point. Listen up, everybody, carefully. Why would you give the money back to the government when instead you can give it to your employees?
Right.
So, Chris, I'm going to recommend, I think that was your question, right?
Mm-hmm.
I'm going to take that $2,000, everybody, 1978, and I'm going to give my employees a collective bonus of $1,000 during each 4-week period of time. Everybody with me on this? You can't do this to yourself, but you can do it to your employees. So watch. I'm going to take that 1978 and I'm going to make that 79.54 and 79.54. And then everybody, I'm in the green. I owe nothing back on the 17.386, but I still have this problem of 21.9 and 17.386. And Chris, I'm going to the bottom of the form, all right? And everyone, let me just do one thing. I've got to make an entry here. Chris, how many employees in the 8-week test period, including you? 3?
2.
Or 2?
2.
2. All right. How many employees last year? I'm going to say 2 again, just to keep
Correct.
it simple. All right. And you got to feed that to make this work. And Chris, one last thing. Did you apply for the EIDL grant since the first phone call?
I did not. I tried and could not get it in. So I guess that kind of worked out.
Okay. It is. So you don't have to pay it back. So let me tell you what, the $44.92 that you have to pay back, Chris, is simply the fact that the bank gave you too much more money up here, right?
Mm-hmm.
And that's basically the $44.92, not exactly, but it's pretty close to it. And hey, everybody, go with me on this. Chris got 21.9, all right? Now listen to what I say. The loan is tax-free. The forgiveness is tax-free, all right? And at the end of the day, by the end of the year, all the things that Chris paid with this money will be tax deductible. So that's what I think is going to happen. So to owe back Chris $44.92 at the end of the day, over 2 years at 1% with the first payment deferred for 6 months, I mean, the interest is only $90, all right, over the 2 years. So that's not a bad deal.
No.
Chris, are we good?
I'm good. Thank you very much.
Was that your question you had about giving the employees a bonus?
Well, not yes and no. My question was, our state didn't allow us to technically go back to work until May 7th. So I wasn't paying myself or my employees while we were forced off. So how does that affect my 2-week or my 8-week period from when I got the loan versus when we were allowed to go to work?
And let me just answer that very specifically. A lot of people have requested that they don't start the 8-week period until businesses are allowed to reopen. And that is simply not in the law at this point in time, Amanda, as of today. The 8-week starts with the day you got the money deposited in the account. So the point there is pay them while they're home. All right. Pay them while they're home. And the theory of the PPP, everybody, is to keep the people off of unemployment. So if they're getting a paycheck for 8 weeks, then they theoretically shouldn't be on unemployment for those 8 weeks. That's the theory of this.
Okay.
That was really a good example. Amanda, I'm done with my job here. Unless you'd like to have somebody throw me another example, I'll be more than happy to take some questions.
How about we answer some questions? There's a couple in the chat here. First question, can you spend 100% on payroll?
The answer is, and Amanda, I need to know more about the question. Are we talking about an S corporation, C corporation? Or are we talking about a sole proprietor? That has to be asked.
Okay, Janet, can you?
It's an
Because here's the deal.
S corp.
An S corp.
S corp
Okay.
market center. I'm a market center.
Very good. Now, the answer is yes, you could, okay? But I wouldn't necessarily fill in payroll until you take care of line 39, 40, and 41, and then use your payroll as your adjusting item, all right? Because I think the banks are going to look less favorably on where you intentionally make a payment to avoid forgiveness. So I would use up 39, 40, and 41 first, Amanda, and then use line 38 as your adjustment. But I want to make it very clear that payroll to the owners, everybody, I don't think the bank's going to look at that very favorably, but owners to payroll bonuses to non-owners, our bank has said go for it. Amanda.
And I think this will go with the question that I have, but are bonuses to market center staff included in the payroll amount allowed? So you can do the same thing you can do that, right? You can just go back and bonus your market center staff.
Absolutely.
Yeah, okay. And
absolutely.
I have a question around, we have right now something that I'm seeing across the board as I coach mostly OPs, and we're seeing that we had some people that were kind of marginal in terms of performance in their roles. Now that we're remote, really are dropping the ball. And we probably need employees, and we probably need to go a different direction. They're just not stepping up and they're giving their jobs back. So if we were to let somebody go for let's just say for underperformance reasons, and then hire a replacement, is the salary of the, like, are there any penalties associated with that?
No, the answer is no. All right. Here's the key, though, everybody. The obvious theory of this is to keep your employees on board, but the SBA has clearly recognized that some employees don't want to come back, everybody, because they're getting more unemployment with the $600 additional amount per week, that they don't want to come back. But here's where you get into so, man, to answer your question, if you hire somebody to get and replace them right away, you got no problem. But where people are going to have an unintended consequence, now, Chris, this goes to you why I asked the question. Everybody, if you had this many employees in the test period in 2019, and this many employees during the 8-week covered period, all right, everyone, then you drop the number of employees and there's an automatic non-forgiveness based on a certain complicated ratio that is in my PowerPoint that I did not have time to cover. And that's why I asked Chris, how many did he have during the test period last year? About 2. How many did he have during an 8-week cover period? 2. And Amanda, back to you. If you fired one and hired one, you're still at 2 and 2. So you're good. Okay. We don't really have that kind of problem in the real estate industry like other industries have.
We wouldn't be able to fire one and then hire contract labor.
Yeah, contract labor is not an employee.
Okay.
They got to be a W-2 employee to count.
Okay. What other questions do you guys have? Some market centers have 1099 staff members in addition to W-2 employees. Can they be counted? No, I think the answer is no.
That was Chris's question. And the reason for it, everybody, and remember the first call, all right? We made it very clear, Dale and I made it very clear that our market center owners, everybody, could not treat the commissions paid to their agents as wages because the agents were allowed to go get the PPP on their own 1099s. That was the issue, all right? So same here. If it's a 1099 payment, you cannot consider it. But the banks erroneously did that early on, like in Chris's situation. Amanda.
Julie's asking, what about new monitors or equipment that it takes to set up home offices? Would those be forgivable expenses?
If it ain't on the list, it ain't on the list. All right. So now let me just say this. If you borrowed money to buy the equipment, all right, the interest, but you had to have done it before February 15th. If you leased computer equipment before February 15th, the lease would qualify. But the equipment itself does not qualify. Coaching does not qualify. Accounting does not qualify. It's got to be on the list.
Okay, so I got a couple more questions here. Do you recommend giving the unforgivable amount back or just keeping it at the lower interest rate?
Well, let me tell you what I intend to do. Let me answer what I intend to do is I don't want this hanging over me for the next 2 years. I don't even care at 1%. When I walk in there with all my documentation wheel to prove forgivableness, and the bank says, thank you very much, we agree with your number, I'm writing a check right then, Amanda, to end this for me. And in my case, I'm going to have to give it back about 1,000 of the EIDL plus about 50 or 60 bucks of other non-forgivable because I will not have spent it all. I'm getting rid of it because I got the money and I don't want to deal with it for 2 years.
Okay. And then, and I think you answered this again. So for Oren, can an S Corp increase employee paycheck? You can give them a raise, yes, or a bonus.
Well, I would recommend bonus everybody because a raise sticks with you after the 8 weeks. You just can't bonus yourself as the owner. I just have to make that comment. You can bonus your employees who are not owners.
Okay, so another thing that's happening, you know, a lot of our market centers went in and negotiated leases or forbearance on their leases and that sort of thing. And those are huge amounts. So the question here is, if you've held off paying your rent, should you continue to pay regardless because it's such a huge expense in a market center?
Well, number one, you've thrown the word forbearance in there, and obviously that means put off making the payments. But anything you make a payment on that qualifies like a lease, all right, is a legitimate forgivable expense. And I'm not the one to say if you've already been granted forbearance, should you make a lease payment? That's kind of a non-tax question. I don't have the knowledge to answer that question, but I will tell you, if you do make the payment in the 8-week period, it is a covered expense. Yes.
Okay. You probably, for Andy, since you asked that question, you probably come in here and see kind of what your gap is between what you actually paid your employees too, and see, do you even need that?
By the way, everybody, I'm going in next week to give my bank this spreadsheet. Are you with me? I'm going to train my bank on this spreadsheet, and I would like to tell you what the banks are saying. They don't want to argue over forgiveness. They want to grant forgiveness as much as possible. Let me tell you why. Because that will more quickly give them the money from the SBA to reimburse them for the money that they've dispersed. But anything they don't forgive is a payment over 2 years, everybody, and not much interest, and the banks don't really want to deal with that. Are you with me? So I'll guarantee you the banks will also appreciate you paying off that remaining unforgivable when you settle up with them. Amanda, your clock.
Yeah, I think we're done. If you have any additional questions, or again, to get a copy of the spreadsheet, the PowerPoint, the document that Chris has referenced, email me, amandalight@KW, and we'll make sure that we get the recording and everything over to you. And if you have any additional questions, you can ask us there, okay? And Chris, we just thank you so much for your time. This has been incredibly valuable. You've helped us get so much money for our market centers and for our associates, and now helping us get that forgiven is just, thank you so much. Huge difference.
You're welcome.
To us.
Everybody have a great weekend. All right. Nice talking to you. Bye-bye.